Today is Tuesday, March 6th, and this is the ADM Investor Services Weekly Market Kickoff. Today's guests are Alan Bush, Senior Financial Economist here at ADMIS, and Steve Freed, Vice President of Grain Research. Alan, in mid-February, the June 30-year Treasury bond futures took out a double bottom, taking futures to the lowest level since December 2014. What is the outlook for Treasury bond futures now?
Well, now that we did take out that double bottom, there has been somewhat of a recovery and a consolidation pattern is being formed. But I think as long as the Fed is on track to raise interest rates this year, that ultimately we will see a new break down to new lows for the move. In fact, the entire interest rate futures complex is likely to trend lower.
And today, Dallas Federal Reserve Bank President Robert Kaplan said that the Federal Open Market Committee should get started on rate increases soon. What is the outlook for Fed policy now?
Well, it seems very likely that the Fed is going to raise rates at the March 21st meeting. In fact, there's an 89% probability that they will do just that. Some at the Fed are saying there will be 3 rate hikes this year. Some are saying 4. Some analysts elsewhere are saying there could be as many as 5. I think 5 is virtually outlandish to predict that many. I'm going to have to go with only 3.
Last week, stock index futures fell when President Donald Trump said he would place a 25% tax on steel imports and a 10% tax on aluminum imports. Does this negative news suggest the bull market for stock index futures is over?
No, it does not. It definitely has slowed it down a bit, though. But traders are starting to believe that this could be some type of negotiating tactic, as stock index futures put in a very good performance yesterday, and there's follow-through strength to the upside today. So we are not in the beginning of any new bear market in stock index futures. Some of these political issues, I believe, have only slowed the bull advance.
Great. Steve, on to grains. Grains are lower today. Why is that?
I think the market is trying to take some profit taking on maybe an overbought technical situation in front of an important USDA supply and demand report that comes out on Thursday.
I see that soybeans have rallied from their lows, soy meal $90, corn 35 cents, and Chicago wheat 95 cents. Will the rally continue, or is this a top for now?
We've asked a lot of analysts as to whether they think this is the timing and the price for a top, and most of them say it's not, because we really don't have a weather premium in for the U.S. summer weather pattern. We've had a nice rally because of the Argentina drought. We're trying to price that in and what it means, but I think in the next 2 supply and demand reports, USDA could actually start raising U.S. soybean meal and corn exports and lower the carryout, which should bring in additional buying.
What is the latest on Argentina weather and the impact on the 2018 corn and bean crop?
There's some concern that they've lost 30% of their corn and soybean crop because of their drought. And that could shift demand to the United States. There is even some talk that we could see some potentially record exports of U.S. corn, soybean, and soybean meal from the month of October through the month of March of 2019.
How has the U.S. farmer responded to this rally?
Farmer has sold a lot of grain, especially in the soybean sector and old crop corn. We estimate now that the farmer sold about 80% of the 17 beans, 25 to 30% of 18 beans, 65% of their 17 corn, and as much as 5 to 10% of their 18 corn. So they've aggressively sold into this rally, and I think they think it might be an unexpected gift for them.
When will the USDA issue their first official estimate of the U.S. 2018 planted acres by crop?
It's at the end of March, and so right now at their outlook conference they said that the farmers would plant the same amount of acres as it did last year in corn and soybeans, 90 million, and about a little over 46 million wheat acres. The guesstimate is that when it's all said and done, might be a little bit more bean acres than that and a little less corn acres than that. So I think it's a really important report, especially if demand is going up.
Please remember that the opinions expressed here today are solely the opinions of our guests and are not necessarily the opinions of ADM Investor Services or Archer Daniels Midland Company. If you have any questions or comments or would like to know more about our services, please contact us at www.admis.com.